Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. How we doing today? Happy Friday to our audience.
Happy Friday. Happy Friday to the reversal challenge winner in the chat. Shout out to Manfred. Man, if it looks like I'm crying, it's because I was. The end of that reversal challenge was hilarious. Great entertainment always on a Friday for that reversal challenge. And Manfred, shout out to you for winning it. They're going to contest your victory, Manfred, but I saw it. You had my vote. You won. So nice job there. Nice job. Looks like we look good, sound good. Welcome everyone to At the Buzzer, our market recap. If this is your first time here, the goal of this session is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I've been a Topstep performance coach since June of 2023. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You're all our chat, our audience. Thank you for joining us on a Friday and every day that you do. We appreciate you. We can't do these shows without you. Let's get into the markets, into the news. But while we do that, let us know how your week went. Were you up on the week, down on the week, anything that you learned from the week? And we'll get into the markets. Government shutdown is still going on right now. I think we are at day 17 and trading day. I think that would make it trading day 13 in the government shutdown. So we're not getting some of the economic numbers that we are looking for. There was some housing data that was supposed to come out earlier today, right before it was released, got canceled. So these are still, headline-driven markets right now. We got some comments out of the president early this morning saying that, 100% tariff is not sustainable with China. So he's looking forward to making a deal, and he's expecting to speak with China soon. I think we're doing very well. I think we're getting along with China, President Trump said, adding that he's going to speak with President Xi later this month. So hopefully we do get some resolution on that trade war. We also got the government shutdown continuing to happen as well. And let's see where we get to on that. Anything you have on the news, Coach Paul?
Well, just the new headline that just came out. France's rating lowered on heightened risk. No, that can't be good for bonds. I don't know if that's completely unexpected, but it is further evidence of deterioration of economic well-being throughout the world.
Interesting times. Interesting times. S&P downgrades France to A+A. Okay. Interesting.
From A-1.
Interesting stuff.
Have you ever studied the rating system?
I have not. Nope. Yeah. I've
not. Didn't look like my report card when I was a kid.
Mine either.
A-. But yeah, it's a little good. Let's just put it this way: it's a downgrade in their debt.
Gotcha.
Notice it comes out on a Friday late.
I feel like, didn't we get a Moody's downgrade as well?
Yes, on a Friday.
On a Friday after the close.
Yeah.
Interesting timing on that. It's like, guys, we had all week, right? We had all week. But hey,
put the numbers out. Job.
Right. Let's take a look at the quote board. 36 different markets we can trade with Topstep accounts. And today, to the downside, we had cattle down 2.37%, silver down 5.24%, and platinum, our biggest percentage mover to the downside, down 7.22%. The upside, we had RBOB gasoline futures up 1.2%, soybean meal up 1.48%, and natural gas up 1.84% for our biggest percentage mover to the upside. To talk about our big four, crude oil up 0.49%, the S&P up 0.61%, gold after making a new all-time high down 1.3%, and the NASDAQ up 0.71% on the day. It's Friday. We've had a week. It has been a week. Let's take a look at the weekly chart. Weekly chart on the NASDAQ, Coach Paul here. What are we seeing?
Is it a 3-bar reversal? It could go either way from here. What I see is balance. Um, you could turn that into a monthly chart, and we're going sideways with that. Still with that big candle, mostly from last Friday, hasn't fully recovered. Um, but definitely a little chink in the armor on this bull market, but still upward and to the right.
Up and to the right for sure. After the hit we took last week, inside week, we are seeing the weekly ATR increase just a little bit here, 827 points. Um, but we traded inside last week. So still some indecision about where the market is going directionally. But that weekly candle closed higher than it opened. Right, we know we opened up with that gap. We tested into that gap a couple of times, but the market is still holding up above 25,000s, holding above, 50% of that Friday range. Do we get a resolution over the weekend? Maybe. Any headlines that come out Sunday open is going to be interesting. Let's take a look at the 30-minute chart then on the NASDAQ. Pretty much a range day. Here in the NASDAQ in all the equities. We're still inside yesterday's range. We had a sell-off overnight, and they just bought it right back up. I feel like there's not too much to talk about on this chart, Coach Paul. The metals were really the show today. Anything
Well,
you have here on
there
the
was
30-minute?
that big break. Maybe it was the rumors of the French downgrade because it happened in Europe, and it
It
was a
did.
pretty hard break. And we have with with only with electronic session versus just the regular trading hours, it's two different stories.
Yep.
Um, but there was a pretty big break. Um, Now, by the way, that was a 50-day moving average, that low. We bounced off it early and was on
Yes, it
tested
was.
on, yeah, and we tested it last Friday. So it's holding, but sideways. But what a buy down there. If you were up or maybe you were in Europe, I don't know, but that really had a nice bounce off that. That's pretty favorable to
Yep.
me.
Yes, it is. We looked below the weekly open, and it turned the week red for a little bit down there. Was actually short in during slow markets last night. I ended up taking the trade off, but the idea was, hey, do we make a new low on the week or turn this week red? We turned it red for a little bit and bought it right back up, ending it with a green week. Really strong reversal there. And huge ranges that we're seeing on these daily moves, high to low. We had a 630 point range day in the NASDAQ. So more than enough opportunity. We've been saying it, scale down, size down. The market's presenting more than enough opportunity for you to not have to over leverage into any trades. And we're seeing that again today. Regular trading hour session. Let's go down to a 3-minute chart here. It's been kind of the same. It's been somewhat choppy. One of the things that I like, actually, let's go back to extended trading hours and look at Coach Paul. You brought this up, this volume point of control. I'm starting to like this volume profile a lot. I'm gonna be honest. But if we look at a volume profile from the overnight session and then a view up from New York, price look lower than that volume point of control. Volume never traded lower. Just a really nice push. Now these are wide ranges, right? We talked about this all week, but your charts do a very good job of deceiving you when we're getting big ranges, and it
Mhm.
consolidates all the range that we're seeing. So some of these sell-offs below this point of control, these are 50, 60 points, 70 points that we're talking about. But if you're trading with the reasonable size, we rejected the volume from the overnight session and pushed higher all day. It wasn't an easy trade. It was a two-sided trade. There's a ton of opportunity on both sides. We had some rejections up at the initial balance high, up here at 24,961. Shout out to who was I on with, Andrew, who called out that initial balance breakout and short. Pretty nice trade there. Just a two-sided market, ton of opportunity, which we welcome as traders, but it feels like, Coach Paul, if you hold on to a bias too strong in any direction in these markets, unless you're buying the lows in London, got to be a little careful and secure some profits. Maybe not see profit, take profit on every trade, but these ranges are wide enough where, hey, if I get some money on the board, I'm going to take something.
Well, yeah, be quick. In volatile times, understanding, was I looking last Friday in the 5 minute before the tweet, the average true range in the S&P in a 5 minute was like 4. Well, let's use 9 o'clock reading. Was about 5. We'll just go 5.5. This morning, that same time frame was 11, 12. So
It's doubled.
it's doubled. So if you don't adjust the size, you're risking twice as much, because the ranges are, and we can see that, like you said, it's you better be quick, or you better size down, because your exposure is twice as what it was last week. Now I choose to size down to a point where if you can't afford it, you don't have to trade this market. You don't have to be forced into it. And we've seen that happen across all markets this week. I'm just about everyone I can, from Bitcoin, Euro currency, all the equities, and of course, the metals. They've probably quintupled. So understanding that every day, keeping your eye on that, it allows you to remain liquid in these type of markets. And you just said, but in today's range,
Yeah.
I mean, we had $1,000 drop in NASDAQ last week on Friday. What was it? A 1,200 range?
1,200 point range. Yep.
Now, the function of all this volatility is what happens. Market makers start, and we saw this in April, and this is what they need to do for them to survive. Okay, now I used to be 7 bid at 8. I'm 100 up on both sides. Now it becomes I'm 5 bid at 10 and I'm only 20 up.
Yeah.
And they do that because of the volatility. They can't be in the same size. They have to widen their bids and offers, and that gets reflected in longer time frames, as we see. If you don't like it, and there's nothing you can do about it, but you better be able to identify what you can afford to trade, because you can be right here and get lucky, but the next time it comes around, it could ruin you. So keep an eye on it, understand it.
Absolutely. Absolutely. S&P's ending the week in the green as well. Let's take a real quick look at that weekly candle. We're not far off from all-time highs in these markets. All it takes is some semblance of a trade deal or delays in tariffs, and I think we are trading at all-time highs. These markets are holding up pretty well here. Take a real quick look at the Russell. Same thing here, and the Dow, very similar as well, all kind of holding up here. Let's take a look. The metals have been the show. Gold on a weekly. This is now 8 weeks in a row that we have not taken out a prior week's low in gold. This has been, over the last 2 months, a 27% rally, about, right? Just kind of measuring that, eyeballing it. About a 26%, 25.5% rally in gold over the last 2 months. Even today, we got this major wick at the upper extreme of the range. We did make a new all-time high today, 43.92. It looks dramatic when you look at it on a daily, but when you look at this on a weekly chart, what are you seeing, Coach Paul?
Well, I'd see a huge range, $300 range. This is now $300 was the weekly range. So we were down, what, about $100 today?
A little bit more than that, actually.
All
Let's
right.
take a look on the daily. Where did we close? Okay, so we closed about $100 off. The
So
range for the day was
$100.
about 190.
Pretty dramatic.
Extremely dramatic.
Now, look at the daily and go back to the weekly. That daily, the weekly, I mean, possible top. So it becomes now these lows, because we haven't made a weekly, we haven't broke a previous weekly low since, you said, what, 8 weeks, 2 months?
Right.
Now that mark that low. Now coming in, we finished in the middle of the range. After today's action, you look at it weekly, it's like, okay, it kind of makes sense. There's what here looks bearish.
Yeah, nothing really. That weekly low is 200 points off. And with the selling that we saw today, is it possible that we get down there in one day? It is, right? Could we see a 5% sell-off day in gold? Absolutely could. This market has run, and we say it's hard to sprint a marathon. Gold is literally sprinting a marathon right now. It like again.
Some of those Kenyan runners do it.
Oh yeah, absolutely. 2 hour and 10-minute marathons. Someone's doing it, and gold is doing it right now, right? And leading all of the other metals with it. This is a pretty insane rally. I hear when Andre's on Top Step TV, I hear the caution in his voice. He's like, "This is not healthy, right? This is not supposed to happen like this." And when markets get euphoric, we see moves like today, right? Where everyone's just like, okay, go to BJ's, buy some gold, right? Go like melt down all your jewelry into gold. When markets get euphoric, we are going to see these extremely sharp pullback moves. Now, this doesn't mean that the trend is over. And if we can see where we close, we didn't close below the prior day range. We broke below it, and we've done that before. Anybody remember October 9th? That was the highest volume range, highest volume day that we've seen on gold all year until today. Today, 541,000 contracts traded in gold, and we still closed inside yesterday's range. So is the gold rally over? I'm not going to be the first one to say that. But this daily candle means a lot, right? That is now the highest volume candle on the day. We are continuing to see volume build on the way up, which validates this move. And we've been seeing, we'll see what the open interest numbers are on Monday. We've been seeing open interest increase as we go up. So there are new buyers coming into this market at whatever price they can get. How long that lasts, I think the market is going to tell us that. We are 5% off of 4,500, and let's measure this correctly. About 17% off of 5,000 in gold. Yeah. Coach Paul, you ready to say this rally is over?
No, absolutely not. Like I said,
Yeah.
mark last week's low.
Yep.
And as we climb up these stairs, could it be? Yeah, I don't. It could
Yeah,
be. I
it
don't
could
know.
be.
They find a cure for gold over the weekend. You might see some headline. But at all-time highs, you're going to have all-time high volatility.
Yep.
And boy, look at the volume, though. I mean, that's still not. When we get these big volume, they're almost what buys.
Yeah, we're going back to COVID time to see high volume like that on gold. 441,000 contracts traded on August 12th, 2020. This is the highest volume candle we've seen in 5 years in gold. Is-
Interesting.
Yeah, we are watching history every day,
Yeah.
which is crazy.
Now, looking at that, we like you said, we barely went through yesterday's low, and we bounced somewhat, but we didn't get follow through. So we set up again. The next week's going to be very, very interesting. I let's look at the half hour.
Chat, what is that white line? What is that white line? Got a comment here from Oslukra. Coach Jay, I want to thank you guys for the information presented here is pure gold. Just check how MNQ had a nice bounce from the highest London 3-minute 50% candle. I passed 2 XFAs this week. Glad to hear that anything we say on this show, that's why me and Coach Paul do it. All we ask for is likes and for you guys to ask us questions because, it makes us better. But I'm glad to hear that anything that we have talked about on this show helps anyone with their trading, right? Ultimately, that's what our goal is. There are times where I wish that in my trading journey I had something like this, right? So we provide that. But 200 moving average. There you go, chat. Thank Coach Paul for that one.
Great. So in all that break, we went where it just stopped.
Yeah.
Now, doesn't mean it could continue to rip it, but interesting that that was the most dramatic break we've seen in this rally, but it's relative to the 200. When's the last time we touched the 200 on the half hour? And look what happened.
That was October 10th. We've been rallying since. That was pretty much the low of the week. Last time we crossed it. Yep. Right around the lows of the week. We crossed it and we've been rallying ever since. So the question is, does it hold? Right? Does it hold? Coming into Monday, does that hold? Last night, we just saw I actually took a long in this first 30-minute candle last night. I was just like, gold looks like it's just going to continue to rally after that close that we saw yesterday. Into the close, we saw gold rally really hard and just continued into the Globex Open. But what happens at major levels when we don't get interest? Right? We talk about this all the time. 4,400, we stopped 8 points below it, and volume never left this 30-minute range to the upside. So all of this buying that was coming into gold, VWAP never left that range to the upside, Coach Paul.
No. By the way, why didn't you hold it till it was a winner?
Oh, I won. It was a winner. I took it on the shorter time. I took that trade on the shorter time frame. I took it on like a 3-minute chart, and I was out, right? Because we did get some urgency on the 3-minute here. So I did take this trade. I think I was long from 61s. Yeah, I think I was long from 61s and took it up to about 86 or so. What happened?
61 to 86. It doesn't even, those are dollars.
Yeah. No, this was a huge move. It was like a 25 point move. I said, okay, I'm good, right? This could rally to all-time highs, but this extreme volatility, I'm taking money off the table, right? And maybe I don't need to close all of my position, but I'm taking money off the table, right? Because it's extreme volatility. Could I hold on? Could it rally all day? It could. I can't think about that because I am, you're always going to leave something on the table. I want to try to do something repeatedly. Even if I took a short here, Dakota took a short last night in gold. Got a great profit from it on his XFA. If he looks at this chart and says, oh man, I was supposed to catch 170 points, 180 points in gold, this has literally never happened before or hasn't happened in my trading lifetime. So if I look at this chart and say I'm supposed to catch that entire move, I'm doing myself a disservice, right? Because I'm looking at an anomaly that has never happened in my trading career. So to set an expectation that I'm supposed to catch this entire move, just not fair, right? Not fair to my process as a trader. So you got to take what you measured and go from there.
Well, first of all, we have to take measured risk. What does that mean?
I
You
know
have to,
exactly how much I'm losing if goes against me.
yeah, and when that's reasonable. What is it? It'd be would it be reasonable to think I'm going to take 150 points? How many? Like you said, it's never happened. It might have happened in 1980.
Yeah, I was saying in my trading career, it's
Maybe.
not happening in my
I don't
life.
even think then. I think 50.
The percentages were much smaller, right?
Yeah.
The price was much smaller. So
Yeah.
150 points, 180
Yeah.
points.
So lessons. It's take reasonable risk reward because it's about a series of trades. This is the
Right.
grand slam in the World Series if you got short and held it all day.
Right.
Well, that doesn't happen every day. By the way, that might happen once a year. Oh, wait, not even that.
Right.
So, but there is plenty of opportunity. There was a great J trade earlier in this morning. Like was that
This one here.
right there?
Oh yeah, this was still slow markets time, right? This is still Asia session. We made the new lows of the day there, right at a major level, 4300s, right? We talk about these markets' reactions to whole number levels. 4300, we get volume exhaustion, we close above it. That's a nice trade. That's not a nice trade. That's a phenomenal trade. If you could catch a piece of this, right? This is like could be your one trade for the week type of trade if you catch a percentage, catch this move where again, the ranges are huge. We're talking about from this J trade, right, which is something that we measure all the time. And this is back to when you're good, you get lucky.
It's funny. The better I am, the luckier I get.
Right. If you have a setup to take and then the market just says, hey, yeah, well, your setup is still playing out. And that's why you have to take a technical approach to these markets, I think. I think Coach Paul agrees with this as well. Sure, your setup worked out. We're in higher volatility here. We'll reward you more for waiting for your setup. Instead of trying to figure out how to squeeze out the entire move, have a setup and let the market tell you that your setup is worth more now than it normally is because of the bigger volatility. But yeah, that was a great trade. Right back up to those
Yeah.
highs, 492. Someone was selling hard up there.
Yeah. The buying stopped too. That I look at it as because we didn't have a dramatic. We didn't have a J trade on the top.
No, we didn't.
That's why I'm not very bearish. It was more of a correction that
Yep.
we didn't see dramatic buying like some bad short that had to get out.
Right.
Um,
Good point.
but that was a classic J trade. Man, what was that at that time? See, this is all a matter of volatility. You might, by the way, what was the risk on that J trade before?
Oh, 23 points.
23. It's $230 on a micro.
Hold on. It might be more than that. It's 32 points.
I bet Mike might even be able to at a micro. It's $320
It's a lot. It's a lot of risk.
on one micro.
A lot of risk.
Now you could go back. Well, 2 to 1 got 600, but you can't get any smaller than that.
No. Yeah, it's 1 micro. It's 1 micro, right? It's literally the smallest size you can trade, and we're talking about the daily ATR being, the 3-minute ATR being $14, right? So 28 is the risk. That's a lot. Micros felt like minis today. A lot of said, yeah, agreed. Agreed. And then we started to see some continuation volume, right? We say it all the time. High volume does not always mean reversal. We started to see continuation volume. This is a 3-minute candle, 318 Eastern time, $50 3-minute candle, $46.5. But look at what starts to happen, right? Where on this one, we got the reversal. And I know there were some traders, I actually took a trade, and I'll point it out later. But this one, we had volume leave that range to the upside, right? Price closed above it. At some point, these sells started to hold, right? Here's the first one.
There's another two.
Here's the next one. These start holding. Once these start holding, we're in liquidation mode, right? Like buyers are in the blender and it's liquidation mode. Sell everything that you have, right? We did get a candle close here in this case. And this was a potential J trade. But where did this one happen? This was closer to that 200 moving average. I took this trade. I did take this trade. And yes, chat, I preempted this trade. I will say that. But I took it with small size because I took it with small size because I preempted it. It was actually this candle. It was this one right here. I think I got long from 27s. Is it this one? Yeah, it was this one. I got long from 27s because that 200 moving average was there, right? My risk was small size, looking for the reversal. But even then, if we look at a higher time frame, 30-minute chart, the highest volume 30-minute candle that we had on the day is still holding for right now. So my trade was buying near the low of this because I have that 200 moving average there on the 30-minute chart. I took the risk, was comfortable with the risk, but I had to take this trade off, right? Because if we don't close above the high of this 30-minute candle or some of these higher volume sells that we have on the 3 minutes, then this is still continuation volume. It's just a nice rebound. And again, this here is a $50 move in gold, where I don't need to be greedy, right? I could look at this and say, oh yeah, this needs to turn around for the full day. This $50 move was a full daily ATR 2 weeks ago, right? So I got to remind myself not to be greedy in this case, right? Yeah, the market is presenting more opportunity, but if I could get a full daily ATR move in 30 minutes, that's my trade. That's my trade. And instead of trying to catch, again, 180 points or 190 points, whatever gold did today.
Dollars. Which
right.
would be 1,900 points.
Right.
Good luck.
The spread today in gold at one point was $1. 10 tick spread in the minis. So, we were talking about slippage. If you're trading minis, you're giving up what is that? $100 on a market order?
Yeah.
Giving up $100 on a market order.
So Billy's saying the Merc is going to announce that it's going to offer a 1-ounce gold futures contract. Now, what did they know? Well, probably, their biggest success, the Merc hasn't really offered anything new. There's been no revolutionary offerings. Where the successes come from, now I'm a mid-am, I started at the Mid-America minis or smaller micros because it's relative. So that probably did it would only make sense. Who can afford? People are going to shut off a lot of smaller traders. We just said a micro, $300 risk.
Yeah.
And on a 3 minute?
Right.
All right. It's like, once again, it was like when the NASDAQ first started, it was at 1,000.
Right.
So I'm glad to see that. Makes sense. I would trade it because, what's interesting is I just reminded how crazy this is, but we had a 200-point range today. The Bank of England, I think it was 1999.
So they thought 200 was the high.
They sold it all at 200, roughly 210, 220.
Bad
They
trades.
sold their gold holdings. It was the dead ass bottom.
And then we got a 200-point range day today.
in today.
Yep.
So yeah, change, and that also goes around with to the discussion of proper sizing. You can't trade the same size at different levels. I mean, heck, the NASDAQ, I think it was like the original NASDAQ contract was like, we had the mini before that, but before that, the regular sized non-mini was already cut, and cut that size in half. So it'd be like 10 times
Yep.
what it is now for a micro, for a mini. I'm sorry, a mini. So at 4,300, yeah, makes sense.
Absolutely. Grant Hill in the chat, Detroit Pistons legend, says made 4,500 today with mostly three contracts of micro NASDAQ and micro gold, max 5 micros all day. Even that could be a ton of size, but again, scaling down where you're trading reasonable size with what we're seeing, and you're able to make $4,500. Again, these markets are presenting a ton of opportunity. We do not have to over leverage. We got a seeker liquor in the chat, says lost all profit in my week. All right, let's make a pact here. Everyone who's joining at the buzzer on a Friday, we are going to stop doing that. We are all going to stop doing that. All right. If you have profits on the week, get to a Friday or a Thursday, we're up 1,700. We are all collectively going to stop doing that today, right? Whatever you got to write down in your journal this weekend, you got to talk to yourself in the mirror, look at your trading plan. You're capable of making profits in your trading account. Have to stop the self-sabotage of your own account. Everyone has to stop doing it, myself included, right? But we have to stop doing that. So whatever you have to do in order to stop doing it, whether you have to tell yourself as soon as your trading day opens that I'm going to click on the risk settings and lock up a certain amount, you cannot do it in one day. If it happens over the course of the week where you're managing your risk and you just happen to have a streak of bad days with proper sizing, then it happens, right? But if you're capable of making $1,700 in a week, if I offered you a job right now that paid you $1,700 a week, you would take it. Right. And I don't know everyone's financial situation, but in this job market, I think most people would take that job. $3,400 every 2 weeks. Right. We're talking about almost $8,000 a month.
It's a great point.
Right. So it is. And Seeker Liquor, no, you say, I'm so dumb. That's okay. Right. We don't want to beat ourselves up either. But we have to think about, and JD talked about this on TopstepTV today. You know, the market wants people to do that, right? The markets want people to do that. They want people to say, oh, hey, I'm running off of emotions. I'm running off of a high. I feel like I'm Paul Tudor Jones because I made $1,500 in 4 days. No one can tell me anything, right? Wait till I get my money right. I'm just going to make, $1 million in a week. The market welcomes that, right? Because they know that people are eventually going to make a bad decision, right? So in order for us to combat that as retail traders, as smaller traders, we got to do what we can to pay ourselves from doing all of this, right? So if you feel like you made a dumb decision, Seeker Liquor, it's a crazy name to be saying right now, but if you feel like you made a dumb decision, that's a good thing. That's awareness, right? Don't beat yourself up over it, but be more vigilant in your process where it doesn't happen the next time, right? And that goes for a lot of us, right? You start to overtrade, you start to feel this trader euphoria kind of thing, and I'm saying this from experience. It happens to me as well. We have to slow ourselves down in those moments, right? Shut it down, making $1,700 over 4 days, then you blow it all on a Friday. We're not managing risk. We got to be honest with what we're doing, right? So if everyone agrees or whoever wants to agree with that, put a 1 in the chat. We have to stop doing that. No one in this chat is as bad of a trader as they think they are. You just can't manage risk. Or you don't want to manage risk at this point.
Well, what's the difference between being a speculator and being a gambler?
Right. Risk management.
Risk management. And it's just that's a very thin line. One of the things that I think that it will help in that is the for the discipline, like you said, make a pledge. Well, how? Okay. So the pledge is you have to stop that emotion, whatever that
Yep.
emotion is that drives you into that. What I
Absolutely.
say is write out your plan. We talked earlier this week about A plus setups, and then we had a discussion afterwards. Is sometimes we get, yeah, we want the setup, but do we have the discipline or the patience to wait for it?
Yep.
And also, sometimes I only want A plus setups, and then we think, well, if I take those, then I won't lose. That's another
Mm,
bad part is like, oh, because then your disappointment if it didn't work out, and then you fight it.
right.
But understand these are the trades I'm looking for. Write it down in the morning before the opening or before the night session, before you start trading. What is your plan? Literally write it down. What are the risk parameters? What specifically, whether it's an opening range breakout or a J trade, I'm only looking for that. You write it down. And before you enter to help this pledge, is it meeting these criteria?
Yep.
And then because then you have your entry conditions. What is it? And then you have, once you're in your risk parameters, the ATR or how much you can afford, a percentage of your capital to allow yourself to be wrong, and your profit targets,
Yep.
and have that like before you get it. If this is to me becomes really important, is we just talk about impulse trades, right? I just like
Yeah.
you put it on without it. It's like it's almost designed for this. Oh, it like, and then all of a sudden, oh wait, what am I doing
Yeah. What
here?
did I just do? Right. And you can't take that decision back most times.
It's so now when you have your plan, you have when we've talked about this. Would you get on a plane if the pilots didn't have a checklist?
Right.
I'd get the hell off. I'd be gone. So before you get in, have a checklist. It slows you down. Think about that.
Yeah.
If you don't want to be slowed down, well, I can't do that. I'm just going to slow me down. Well,
Yeah. It's okay to be slowed down. I want to reiterate a point that Coach Paul just made there. We actually had this conversation the other day after we got off of air. If you have what you consider an A plus setup and it doesn't work and not overreact to it, you can take your high probability trades. For example, there was a J trade today in gold. If I didn't take profits on this trade ended up being a loser. Now you get to decide what your trade management is for each trade, but if I don't take profits on this trade, it turns out to be a loser. If I then burn down the house because this one trade doesn't work out, I'm overly emotional in my decisions as a trader, right? And we have to address why that is the case, right? And it's going to be different for every single person, right? But who was it? Tiki in the chat said, uh, I get doubt in my head when my setup doesn't work and start to question if my setup is actually any good. We use these sports analogies all the time. Back to Steph Curry, 47% field goal percentage over his career. He's missed more shots than he's taken. You think he's thinking twice when he's shooting the ball? Not at all. I'm not going to change my form. I'm not going to do anything because I know that this works. Now, maybe you're not at the point where you have the confidence in your trading strategy to know that it works. But if you spent half of a year back testing a strategy and forward testing it and actually executing it, it'll work over time, but you have to give it the space to work. If you feel like you need to adjust every single time, if Steph Curry starts missing shots and then all of a sudden he starts shooting with his left hand, he's so damn good that he'll probably make some still. But, that point, you're getting away from what you do that makes you so great, right? So have confidence in what you see, but confidence in understanding that if it doesn't work this time, I'm just closer to the next time that it is going to work, right? And not that I have to change everything because that's where a lot of hesitation comes from, right? We can't afford hesitation in this game. We have to, when the setup presents itself, if I have the risk budget in order to take it, I have to take the trade, all right? Courtney, I like this. Start tracking the cost of your errors, putting a dollar amount to impulsive trades or revenge trades or whatever your issue is, a real eye opener. Weekly total goal will make you vomit. Yep. I like that, Courtney. How much did my mistakes cost me? How much did my outburst cost me? My tantrums? A lot. I know it's cost me a lot.
You know, it's a great, I'm glad, this is a great discussion because Courtney, thanks for putting that up there. When you do that, and I've done that, not only a weekly total can make you sick, but it can open your eyes. Because there's a great book about stoicism called "The Obstacle is the Way."
Right.
That taking that and taking accountability and understanding that those impulsive or revenge trades are what is holding you back. The way forward is to recognize those and separate those from losing trades and what the fuck did I just do trades.
Yep.
When you can do that, you do that consistently, your impulse is going to be greatly reduced.
Absolutely. Man, I don't even know that I want to go back to talking about markets. They're presenting a ton of opportunity to us. It's Friday. Great conversation here. And again, thank you all to the chat for bringing up some topics for us to discuss. That was a random comment, and not a random comment, but a comment in the chat about giving up your profits. It's important. We can talk all about the trade entries and exits that we want, but if we're not managing accounts over a long period of time, we're rolling dice.
Yeah, because I don't. We're not taking in account. Now, sometimes accountability and discipline can have this harsh, like, oh, you need to take accountability for your action, or you can take it as a positive. Like, that's the way through. Is take like an accountant, take account. These are the obstacles. This is what's holding me back. If I solve that, then that's the way forward.
Yep.
And as I said, people have done it. It just opens you. It opens your eyes, and then you can relax. Like, I really like that trade.
Mm-hmm.
I really want to take it. It doesn't meet the criteria. Because when I've done this before, it's punished me.
Yep.
Okay, at the point where I didn't find anything I liked today. I didn't trade.
Shout out to Andrew. I was on with Andrew earlier today. He called out a great trade, and he said it out loud. There are going to be times in this, right? We don't want to say, and Jen and John said the psychology is the hardest part. My response to that is if we continue to say that the psychology is the hardest part, it's always going to be the hardest part. It is the hardest part, right? But the fact that I know that, then I can address what the most difficult part of this is, right? And really checking with my psychology if my system is secured. Andrew called out a great short, good for 130 points in the NASDAQ. And he just said it out loud. This is extremely frustrating that I did not take that. Didn't force anything else. He said, okay, I guess what I have to do is lock it up. That's extreme maturity as a trader, right? Because the maybe more immature trader thought is, okay, how do I get something else now, right? Where that one I would have made money. I need to find something else that's going to make me money. And if I then try to force a bad setup, and maybe you have more than one high quality setup that you could take, that maturity as a trader to say, hey, you know what, Monday's another trading day, is extremely important. So yeah, I don't want to go off on a tangent too much here. Great conversation though. Can we look at micro Bitcoin? 20-day 200-day moving average, Coach Paul.
Oh, no.
Right at it. Closing at it
with a big spike. We still close above it. What I would have rather seen is close below it and then close above it.
Mm-hmm.
But it's at a value. It can go either way from here. The momentum is to the downside. But if we let's take relative what are those previous lows at this point.
This down here,
Yep.
102s, 102, 103 zone.
All right. Now we did have that wick. Wow, what a nasty wick. That still doesn't look healthy. How many days in a row did we have going down?
To the downside, 4 days in a row, we had this little inside day here. But then if you know, this has been a whole week. We look at the weekly chart. It looks pretty heavy here.
The weekly chart, we touched what?
50 week moving average.
Look what it's done on that 50-week moving average.
Buyers every time.
So that's like a yearly moving average.
Mm-hmm.
What's that thing? Could be. Could be. Now let's look at the half hour. All right. So that's that white line, the 200. That's one I'm gonna watch next week. I'd rather buy some momentum to the upside than get short here. Personally.
There you go. There you go. Quick look in at micro Bitcoin. Any other markets we want to discuss? It is Friday. The weather's still decently nice here. I think it's in the 60s. Might go outside for a little bit. I haven't been feeling the greatest, so also going to get some rest this weekend. Anything else you want to talk about, Coach Paul?
No, I'd say you need to get some rest. It's Friday. We had a great conversation here. Understand that really create, write it out. Have a checklist. Rate yourself, like be accountable, and understand and what obstacles, if you're struggling, what obstacles it's holding you back. And in your plan, you trade your plan and plan your trade. Get some rest this weekend, and we'll see you again on Monday.
Sir, I'm going to answer one more question from Deontay in the chat. It says, hey, I've been trading for about 2 to 3 weeks currently on my funded account. Is that 2 or 3 weeks just your entire trading experience or just in your funded account? I've watched hours of different traders on YouTube and I lost 1,700. I feel like trading isn't for me. I'm wanting to give up, but I feel like I can get better. But I'm really thinking about quitting. Do you have any advice? What's a good trading strategy? Do you know any YouTubers I can watch? Deontay, real quick, is that 2 to 3 weeks of trading experience period or just in a funded account? Extremely important to know the answer to that question. So if you're still here. Wait for that response. And if you lost $1,700, right? You're new. Okay, so 2 to 3 weeks, brand new to trading. You got into a funded account. You lost $1,700. I thought about doing like a summer camp, Coach Paul, for kids that are either in high school or in college, right? Where we teach them about trading, and the first lesson was going to be risk management over everything, right? There's a lot of people. I have friends, family that are just like, hey, how do I get into trading? I see you do this trading thing. How do I get into it? And they'll see when I either post a P&L post where it's green, and this is why I don't really love P&L posts. This is why I like to hide the P&L on my screen, because it kind of sets the wrong message, because I also have to show them the downside of it as well, right? And Deontay, what you just learned is a lesson in risk management, and you're learning it early, right? Now, the question is whether or not you're willing to accept that you have to manage risk through this entire journey, however long you're going to decide to trade. Ask yourself, are you willing to manage drawdowns, because they're going to happen, right? It's not always going to be great. You're not always going to be making money all the time. And are you willing to take the actual steps to manage an account, right? Where if you're in a funded account and you lost $1,700, I'm assuming that was probably 50% of your account, right? Coach Paul's suggestion is don't lose more than 12% of your account in a day. So a lot of times what happens is, especially with the social media space, everyone sees huge P&Ls and it's like, oh shit, I can do that too. And then you get smacked in the mouth. And you're like, wait a second, what? No one told me about this. No one told me this part about it. No one told me that this was a reality, and it is. And it's just the reality of it. I've been in a little bit of a drawdown, but I understand that I've been in these moments before, and I've worked my way out of them. So if you're willing to do the work that it takes to understand that, there are going to be highs and lows in trading. The highs are usually better than the highs if you manage what the lows are. But if you're not willing to do that, then maybe trading is not for you, right? You're 2 weeks in. I would say not to overreact, but you just learned a lesson in risk management that everyone has to learn at some point. Good that you learned it 2 weeks in.
Great advice.
Yep.
It's because, I mean, you're just starting.
Yeah.
It's a game that it's not even, I don't like to use the word game. It takes time. You measure over time. And maybe it's not for you. You have to decide, like, I like the upside, but I really don't like this downside.
That was my sister.
Yeah. It just doesn't work for me.
Yep.
It's good to know it early.
Great to know it early. Great to know it early.
There's nothing wrong with that. Maybe it isn't. I don't know. That's a good question.
Yep. It really
You-
is.
Because just to quote the book, the best loser wins.
Yeah. If you can't learn how to do it, and again, there's going to be highs and lows in it in everyone's trading journey, right? And again, the highs are great when you manage the lows, but it is a reality. So if you're willing to accept that, then okay, right? Just understand that and manage what that downside looks like. And when you do win, secure some of it. The last thing I'll say about this is day trading is not a retirement plan. If you're able to make some
No.
money out of the markets, take it and do something else with it. Shout out to MP, who started Topstep, and we've heard him on Topstep TV say a bunch of times when he made money in trading, in day trading, because it's so volatile, gonna take the money and do something more secure with it. Now, this is not financial advice. I'm not a financial advisor, but there are definitely some more secure vehicles for your money if you are able to pull some money out of the markets, right? So just understand that as well. And chat, you guys got me going today. Anything else you got, Coach Paul, before we go?
Uh, just once again, the great questions. Develop your plan, understand yourself, and then you can decide whether you want this to do this or not. And either one, it's up to you. But it's not an easy business. So great questions on the group today. And we'll go at it again next week. That's it
Enjoy
for
your
me.
weekends, everybody. Have a fun weekend. Do something fun this weekend. I know it's fall here in New York. Leaves are changing colors. That means it's pumpkin picking season, apple picking season. Get outside, do some fun fall activities away from the charts. But make sure you join us back here on Sunday for Anne Marie's market kickoff to prepare for the week ahead. This has been a great show. Again, we can't do this without all of you. We appreciate you being here. If you could do us a favor, hit that thumbs up button on the way out. We appreciate you. Coach Paul, you have a great weekend. Chat, have a great weekend. We'll see you all next week. Bye.
Bye.